Hey everyone, welcome back to Corporate Decoder. Today we're diving into HomeTrust Bankshares' latest filing. It's like peeking behind the curtain to see if the bank is actually making money or just rearranging the furniture while the ship sinks. We will find out what this filing reveals about their financial health and future plans. So this report is basically a snapshot in time dated April 10/25. It's called a Form 8K, which is like an urgent update the company sends to the Securities and Exchange Commission, or SEC, whenever something important happens. The main point of this filing is to announce when HomeTrust Bankshares plans to release its first quarter earnings for 2025. They're planning to do it before the market opens on April 24, 2025. Think of it as setting a date for the big reveal where they'll share how the bank did financially in the first 3 months of the year. This gives investors a heads up so they know when to expect the news. Now, let's zoom out and think about why this is important. HomeTrust Bankshares is the company that owns HomeTrust Bank. They operate mainly in the southeast, offering all sorts of banking services to individuals and businesses. So their performance reflects how well they're managing money and dealing with the economy in that region. Waiting for an earnings release can be nerve-wracking, especially if you're an investor. It's like waiting to open a birthday present you really, really want. Will it be the latest gadget or just another pair of socks? This announcement sets expectations. If the bank announces good results, the stock price might go up. If the results are bad, the stock could go down. It all depends on whether the bank meets, beats, or misses what analysts are expecting. While this filing doesn't give us any juicy financial details, it's a crucial piece of the puzzle. It tells us when to expect those details, so we can see for ourselves how HomeTrust Bankshares is doing. So what can we expect to see when the actual earnings are released? Most likely we'll get a look at things like net income, which is how much money the bank made after expenses. We will also see earnings per share, or EPS, which is how much of that profit is allocated to each share of stock. And we should definitely pay attention to their loan portfolio to see if they are lending responsibly and managing risks. We can also see if deposits are growing, meaning people trust the bank with their money. For a bank like HomeTrust, key things to watch include net interest margin, a measure of the difference between what they earn on loans and pay on deposits. And non-performing assets, things like loans that people aren't paying back, is something to look out for. Now let's step back and consider HomeTrust's position in the market. They're a regional bank, which means they're not as big as the giant national banks, but they have a strong presence in their local areas. That gives them some advantages, like closer relationships with customers and a better understanding of the local economy. But it also means they're more vulnerable to regional economic ups and downs. In conclusion, this filing is just a save the date for HomeTrust Bankshares earnings release. It sets the stage for what's to come and gives investors a heads up on when to expect the news. Keep an eye on the company around April 24th and we'll see how they performed in the first quarter of 2025. So what's my take on HomeTrust? Well, without the actual earnings numbers, it's hard to say for sure, but based on what we know, they seem to be a solid regional bank with a focus on the southeast. If the economy in that region is doing well, HomeTrust is likely doing well too. One thing I'll be watching closely is their net interest margin. With interest rates changing, that's a key factor for bank profitability. And of course, I'll be looking at their loan portfolio to see if they're managing risk effectively. Overall, I'd say HomeTrust is a bank to watch. They're not the flashiest company out there, but they have a solid business model and a strong regional presence. If they can continue to manage risk and grow their loan portfolio, they could be a good investment. Thanks for watching Corporate Decoder. If you found this helpful, please like and subscribe. And don't forget to leave a comment below letting me know what other companies you'd like me to decode.